The S&P 500 opened right at the big 6,300 strike. This is the largest gamma exposure concentration we've been discussing now for the last few weeks. We opened right at that level, and immediately the sell-off ensued throughout the rest of the day. We actually closed on the low of the day just above the 6240 level, down 0.4%, closing at 6243.76. And of course, there was a lot of factors in play that resulted in this sell-off. Not only the opportunity for investors to sell after the CPI news release, but also dealer selling pressure off of this 6,300 strike in the options market also exacerbated the move. And we've come back down to recent support. This is something we pointed out in our Discord community as well as our live stream. We were talking about this support down here at the 6240 level. Going back now for the last week, this has been a near-term support, and it's going to be really interesting to see if we can hold this level at tomorrow's open. We'll be discussing this and hopefully trading off of this depending on where the market opens. We're going to take a look at the moving averages and VWAP to see where exactly a good entry would be. But if this support holds, a bounce back up into the 6260, 6280 level is highly possible. So that's something we'll be monitoring. You can see all the volume today in the options market was right there between 6250 and 6300. So this could be an interesting zone for a potential bounce back play tomorrow morning. Taking a step back though, on the daily candlestick chart, we are getting pretty extended above the 50-period moving average, which is sitting at 60.13. This is quite an extension here, and we don't often see that lasting for very long. When we get extended above these major moving averages for long periods of time, we oftentimes will see some retracement or pullback in the near term. So we're on the lookout for that. But in general, market participants continue showing bullish momentum up the options chain in terms of positioning gamma exposure, growing now all the way up to the 6,700 strike, and we see large gamma exposure growing at the 6,500 strike. So any pullback is likely to be bought just based on the current positioning.
Thanks, Anthony. One thing we noted Friday as indices actually closed down was that we wouldn't be surprised to see the indices come back up to retest the whole moving average, since the whole continued to rise at that time as price was diverging to the downside. And for IWM, with IWM being the last of the major indices in the US to close below the whole moving average Friday, it seems to be signaling, potentially that this 3 to 5% pullback we were wanting to see has started. And I say that because we saw this fairly large, almost 2% down move after failing at this whole moving average 224.71. We can see the whole is starting to roll over and turn downward. Even though we do see this large positive GEX cluster at 230, what I've been saying is that the 3D graph does not show most of that 230 GEX to be concentrated anywhere in the near term. Most of it is August to September. So there's some time before that 230 will become a more solid target. So we're almost down to the middle Keltner channel as we speak. And, the 210 to 212 area was the initial point that we had mentioned just a couple of days ago. And so 210 does look within reach, at 2% a day. It doesn't take much to get to 210. Not that we'll drop at that rate every day. Once again, with IWM seeing this big drop today, we also saw GEX move deeper into the negative territory after only briefly touching negative GEX a couple of days ago. And it's been flirting with the zero line for several days now. So IWM showing negative 560 million to round up. Definitely the largest negative reading we've seen since going back to June 25. So something to keep an eye on, and whether or not IWM will be the canary in the coal mine for the NASDAQ and the S&P. Maybe the rest of this week will tell.
Thanks, Sean. Next, let's take a look at Tesla. Tesla down today 1.93%, closing at 310.78. We've been trading Tesla quite a bit, and the volatility has been a double-edged sword as of late. Tesla kind of consolidating into this 300 to 320 zone. You can see the largest GAM exposure concentration is currently at the 320 strike. Our most recent trade was buying the July 18th 310 320 call debit spreads. We bought those for around $3.30. This was off of the recent headline Trump-Musk feud. And so we got a decent price on that when Tesla was trading around 300. We actually exited that position today, just over $300 profit. So small profit in our smaller portfolio. And you can just see at the time Tesla was trading at 313. So sort of on the lower end of that 310, 320 call debit spread. There's only a few days left to expiration. We've got large GAM exposure at that 320 strike, and we were seeing what could potentially be some dealer selling pressure coming in as Tesla opened up the day near that 320 level and rejected. It's hard to see on this chart, but we'll flip back to the current chart and we'll just zoom in here and you can just see this rejection right off of that upper dealer cluster zone, which is right at the 320 strike. And this is typically what we see a lot of times with dealer pressure at these major levels. What we're looking for long term is a move higher, potentially up to this 350 strike, but it may take further out into the August expiration to see that breakout and potential move up to that 350 level. But on a longer term time frame, Tesla does look like market participants are continuing to position at some of these higher strikes here in the options market. So that's something we have our eye on. It just may take a little bit more time for this consolidation phase to be over, and we would be looking for a breakout, ideally above the 320 strike. A sustained move above that level could see the 400 strike come back into play, and so we'd be positioning for a trade up to 350 and then to 400 at that point.
Anthony, tomorrow could be interesting for the VIX pre-market at 9 a.m. Eastern time. We have all of the monthly VIX options expiring. I did want to point out a couple of things on the chart briefly. It's been pretty choppy with the VIX. I mean, you can see going back to June 24 when we had that gap down in the VIX. But we've had these gap ups and gap downs, and it's been all over the place. But one subtle change that I noticed, despite this choppiness, is that instead of the whole moving average declining for a period of time and then moving sideways as it did for the last couple of weeks, it's actually turned back up again. A natural spot, just based on the Keltner channels, would be to see the VIX spike up to 23. Once we get past the 18 mark, which is just above the middle Keltner channel. So 23 is in range. And also, we'll just take a look at the GEX picture following the resetting of all of those VIX options tomorrow morning.
Thanks, Sean. Next, let's take a look at NVIDIA. NVIDIA, big move today, up 4.04%, closing at 170.70. Breaking the big gamma exposure concentration at the 170 strike, and we see volume in the options market strong from 170 all the way up to the 180 strike. The only thing that has me concerned is this candle. It was a big move today. We basically opened up and closed nearly at the exact opening price, forming kind of a topping candle. Another concern I have is this 50-period moving average. This is similar to what we were seeing in the broader indices. We're starting to get pretty far away from some of these moving averages, and historically, there's some sort of consolidation period or pullback back into the moving average. And so that could be the case here with NVIDIA as well. We've been trading NVIDIA pretty actively over the last couple of weeks, and we actually traded it through the 160 and 165 zone as gamma exposure was moving higher. So that's something we'll need to pay attention to in the options market tomorrow and Thursday. Do we continue to see volume coming in at these higher strikes? If that's the case, that could overwhelm a lot of the dealer selling pressure that could potentially continue tomorrow at this big 170 strike. So there's always this push-pull in the markets between dealer selling pressure and existing positions and new positions coming in. And so we want to be mindful of that to see, is there additional trading activity between the 170 and 180 zone? That's going to determine whether or not this candle ultimately does become a topping signal or not.
All right, let's take a look at Amazon, AMZN. It's largely held above this whole moving average. Currently, the hole's at 225.63. So this is just a sign for me that positive momentum is strong since we're holding above that. And these Keltner channels are just pointing almost as sharply higher as they can. So very bullish trend as well. The current price, 226.35. is just shy of $4 away from the largest GEX cluster we see at 230. A lot of volume today at 230 as well. And if we flip over to our 3D graph, you can see sticking out like a sore thumb, we have the 230 GEX expiring July 18. And with this outsized compared to all of the other GEX clusters we see, definitely raises the probability in our minds that this has a good chance of getting hit.
And we are running a limited time promotion. You can get $300 off our yearly portfolio manager tier subscription. Use code SUMMER 2025 at checkout. We've got a few spots remaining, but this promotion does end soon, so take advantage of it while you can. Members get access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategy, and you'll also get access to the premium channels in our community Discord. Our Discord community's got a ton of great traders in there sharing their own ideas and setups every day, and you can follow along and track our trades in real time as we manage our options portfolio. I'll put links in the description below for you guys to be able to check all of that out. Thanks so much everybody for watching, and we'll see you guys in the next video.